let's talk about dividend aristocrats and kings. So when I started investing in dividend stocks back in 2018, I wanted to research and invest in 5 different individual stocks that pay dividends. And when a company consistently pays and increases dividends to their shareholders, they became either dividend aristocrats or dividend kings. A dividend aristocrat is a company in the S&P 500 index that continuously pays dividends to shareholders and increases dividends annually for at least the past 25 straight years. A dividend king is a company that doesn't necessarily need to be in the S&P 500 index, but continuously pays dividends to shareholders and increases dividends annually for at least 50 straight years, right? Usually when I find dividend kings or dividend aristocrats, it's consumer goods, industrials, healthcare, financials, utilities, sectors that consistently pay and increase dividends. But keep in mind that just because these stocks are dividend aristocrats or dividend kings, it doesn't mean that they're recession-proof stocks. No, not at all, right? Let's AT&T, for example. They cut their dividends a few years ago and fell out of the dividend aristocrat criteria. And it's important to pay attention to what the company is doing and how it's performing every single quarter and when the earnings comes out. And if I remember correctly, AT&T, they had to like clean up their balance sheet, right? So there was so much in debt. They just acquired like a bunch of companies on their balance sheet, and they were just like, you know what, we need more cash. Then we're gonna have to cut the dividends to the shareholders. So there were a lot of disappointed AT&T investors when that happened. That was a few years ago. So anyway. Let me pull up the dividend aristocrat list here. All right, so when you look at the dividend aristocrats, again, obviously they need to be in the S&P 500 index, right? So some of the companies that I recognize right away would be like Procter and Gamble. You'll see that in like toothpaste, toothbrushes, all that stuff. Emerson Electric, 3M, all the masks that we had back in 2020, 2021. They all said 3M on the side, right? Cincinnati Financial, Coca-Cola, Johnson & Johnson, all the shampoo that you'll see is, pretty much most of them will say Johnson & Johnson. Let's see, Target just became a dividend king, and I'll go over that list in a little bit. PepsiCo, and let me go down the list. Walmart is still a year away from becoming a dividend king. Lowe's at 48 years, Walgreens 47 years, McDonald's at 46. Sherwin-Williams, you probably recognize that name. That's from if you ever paint your house, you probably get your material from Sherwin-Williams. ExxonMobil, energy company, Aflac. McCormick, all the spices that you see on the cabinet, that's all McCormick. And the other one that you'll see, like Chevron, Clorox, all these companies, and as well as Caterpillar, you see it in the pharmacy industry. So these companies have been around for not just 10 years, but 20, 30, 40, 50 years that have been consistently paying and increasing dividends for 25 straight years. So let's take a look at Dividend Kings. So the longest paying dividend company is American States Water. And when it comes to dividend investing, I'm really interested in investing in stuff like utilities, right? Because like even during the recession, we can see that people still need water. People will still go to Walmart. People will still go to Target to get their shampoos and stuff, right? And these are the things that I'm thinking about. But it doesn't mean that they're not going to go underwater. It doesn't mean that they're not going to they're going to continue to pay dividends because their EPS has decreased. Like they're not getting enough bottom line anymore. So those are the things that you want to really pay attention to. Could we ever see companies like American States Water, Procter and Gamble ever go go bankrupt? It's always a possibility, but the probability of that happening is still lower than most companies that I'm looking at. So anyway, Coca-Cola, one of the companies that Warren Buffett invests in, and I know he has like a huge stake in that. But yeah, again, these are the companies that you can go through and just check them out and see what they are. But you don't need to invest in individual stocks to get dividends. That's the biggest common misconception here, because I want to show you this. Okay, my S&P 500 index fund. In full disclosure, I do invest in the S&P 500 index and the ticker symbol VFIAX with Vanguard, and it pays 1.56% in annual dividend yield, and that's based on the $369 on the share price. And if you're wondering about your index fund, you can always look at the dividend income schedule. And I'm going to go to distributions here. If you look at the schedule here, VFIAX pays out its dividends in March, June, September, and December every year. And it even tells you what the share price was when when it was reinvested back into the index fund that I own, right? And in full disclosure, I do invest in another ETF, and this is called VYM, the Vanguard High Yield Dividend Yield. And this one pays 2.88%, if you see on the far right side here. And that's a 2.88% in annual dividend yield at the share price of $109. And it pays a higher dividend yield than the VFIAX. The dividend payout dates are the same as VFIAX, I believe. It is also in March, June, September, and December. And the other popular ETF that I do want to pull up, because people always comment on my videos, is the ticker symbol SCHD, Schwab US Dividend Equity ETF. And this is Schwab's US Dividend Equity ETF, right? The name itself is self-explanatory, and that the ETF is managed by Schwab and invest in U.S. stocks that pay dividends. This one pays even a higher dividend yield at 3.37%, I believe. Let me take a look here. But also keep in mind that just because a stock, ETF, or a mutual fund pays a higher dividend yield, it doesn't mean that they're good investments. And I will go over that in the private group coaching session later on. And I can't personally tell you what you should invest in, but if you sign up for the private group coaching session on my YouTube page, by signing up for the membership program, and I'm going to show you this, and you can't really do it on the mobile, which is really weird. But in the private membership group coaching session, I'm going to do a deeper dive into the FIRE investment strategies and do more personalized Q&As. And this is more of a public live stream with everyone in it. And you can also schedule a free one-on-one 20-minute financial coaching session if you go to firesidechat.com/coaching to discuss your personal finances.